Today it's all about trend trading. I will show you how to create a winning trend trading strategy, what does it take to become a trend trader, and I will show you how to analyze the charts and find the perfect trade. Before we get started with the trend trading strategy, I want to point you to the time frame information. In the YouTube comments, I always see a lot of questions regarding what time frame I'm using. And although most of the concepts and strategies that I show you can be applied to any strategy, if you want to know exactly what time frame I am on, here you can see it at the top left. 1H stands for 1 hour, and you can always find that information here. So now let's get into our trend trading tips and the strategy. And I've mentored traders for well over 10 years. And although a lot of traders say that they prefer to trade naked or empty price action charts because they believe that in price action there's everything that is necessary. And I would always encourage you to add the weekly pivot point. If you are a day trader, if you're on the lower time frame, here we are on the 1 hour, the weekly pivot point is just amazing for day trading. And why the pivot point, you might ask? So if we look at a long-term chart and we are here on the 4 hour, you could use the 1 hour, doesn't really matter. And I've activated the weekly pivot chart. At the end of the video, I will show you also how to do that in your trading view. So if you want to set up your charts the same way you see them in the video here, just make sure to stick around until the end. And what you will see is that the pivot helps you identify the trend direction. And it's very simple, but it works really well. When the price action is and holding above the weekly pivot point, you can see the green horizontal line, how it unfolds, that's the weekly pivot. And when the price action is able to stay above the pivot, you're typically looking at a long market, a bullish rally. If this changes, so here we go from above the pivot to below the pivot, and this holds up here all the way during this downtrend, you are in a downtrend, you are in a sell-off. Here it changes, we use the pivot point suddenly as support instead of resistance, so we are able to stay above it. We have a little bit of a correction phase. It shifts very shortly afterwards here, we are back below the pivot point, and then that initiates the downtrend. So looking at the pivot point or the price action in relation to the pivot point can be a very good, very simple, but very, very effective filter. If you have problems identifying what the market is currently, add the weekly pivot point, try to observe it, and you will learn a lot. All right, so let's get back to our example. And here we have the weekly pivot point. And it seems like we have shifted, right? We have here this head and shoulder pattern, the left shoulder, the head, the right shoulder. And that's a reversal pattern. The head and shoulder was also created here above the weekly pivot point. So first, the pivot point held as support as the neckline of this head and shoulder, and then it turned into resistance. So it seems like here is the point where the trend tipped. We are now in bearish trending territory. From that point on, once you see that the market is having the pivot point as resistance and the market is staying below, you are in a bearish market and you want to look for short opportunities. And here the pivots help you very nicely. And what often happens during those corrective waves or pullbacks is that they often reach back into the pivot. You can see here this fake out structure. We have a local high, we sell off a little bit, come back, retest the pivot, and fake out the highs. At this point, it's pretty clear that the market held here as resistance on the pivot. We have a lot of selling interest here coming into the market, and that's where you often see the continuation into the next trending phase. Another thing that can really help is we look for structures. So we look for highs and lows, we look for patterns, trend lines, anything that can help us understand the price action right now. So it seems like we have a support and resistance area here. Support and previous resistance, it lines up here. Here we have a double support. This was the endpoint from the previous trending phase. So we can see we are now obviously in this corrective wave. The market is moving sideways. The bearish side is pausing a little bit. We are playing out a correction and we want to look for continuations into the downtrend. And very often what you will see is that if you have a trap or a fake out, the momentum increases. And if it doesn't, that's not a good signal. You want to see that after a fake out, after the pullback hits some important structures, the pivot, it can be a long-term moving average, a previous high and low. You really want to see the momentum coming into the market and you want to see huge momentum because that signals you that here was a power shift. We went from this bullish attempt to the rejection of the bulls and then a complete reversal. All the bulls are getting pushed out of the market and all the bears are resuming. And keep in mind, we are in bearish territory. So to begin with, we have more sellers than buyers anyway. And then you want to look for those tipping points. Where do we go from sideways into trending mode again? And this is where we come to the natural trend rhythm, because it's very important to understand how those things play out if you want to get a good understanding of trending markets. So when we look at a trend, trends often unfold in this way or in very similar ways. So the trends, they don't move in one straight line, right? I've mentioned this many times. The market always goes through this back and forth, up and down. And that is the seller and the buyer flow. We have more sellers initially that drives the price down. Temporarily here, we have a little bit more buyers, but as long as we don't reach into the previous high, we are still in the bearish territory. And in trading, we call those phases where we go against the long-term trend, we call them corrective waves. And the phases where we go with the trend, so in this case we are in a downtrend overall, those are called impulsive waves. Impulsive, corrective, and that's the interplay between the buyers and the sellers. And when we look for those waves and we want to analyze them, we look for steepness. So how steep is one of those waves? It's obviously something very different if you have a very steep and long corrective wave, like here, versus a very short and a very shallow corrective wave, because that shows us there was a lot of buying. Maybe we hit a lot of targets here. A lot of sellers took profits, attributed a little bit to the buying pressure. And that tells you something very different than here. Here we have almost no buyers. The market was not able to move higher at all. So this was really dominant in sellers. So it's very important to look at the steepness of the trend waves, length and duration. How long is a trend wave lasting? Typically, what you see in a downtrend is that those corrective waves are much shorter and less steep than the impulsive trend waves. Also the height, as I said, how high is it pushing? And we want to compare it to the previous wave. We want to compare impulsive waves to the previous impulsive waves. Are the impulsive waves getting longer, shorter? What would it tell us if the impulsive wave is suddenly only that short and we are not able to get below the low? That's very important. But also we want to compare the impulsive to the corrective waves. Are the corrective waves very long, and whereas previously maybe the corrective waves are much shorter? That tells you also something, obviously, that we are having a change in the market. Very often you can see that when a trend is maturing, when you have a very long trend, the longer a trend is, the more the people are going to take profits, because more people have profits, and that is often contributing to longer consolidations. Whereas early on in a trend, you either have less steep or much shorter corrective waves. So that's very important. And why is that important? Because that's where we want to trade. The best trading moves, the largest potential is at those turning points. Where do we go from corrective wave back to trending? We go from corrective wave back to trending. And we want to find those moves and we want to find those positions. Where is the power shifting? Where are we going back into the long-term trend direction? And that is where we look for certain signals. We can look for patterns, for example, because those phases here are very often flags. We can have head and shoulders here. We just have trend line pullbacks maybe. We can look for sideways phases. We look for fake outs, springs, triangles, horizontal levels. And that's what we want to look for in those corrective waves, because ultimately that's the goal. We want to understand the corrective wave and also the impulsive wave. And we want to trade into the next impulsive wave. We want to find the next momentum flow. That is where you make the biggest profits, because that's typically, not always, but typically where the market moves the most in the shortest amount of time. And that's ideal because we find the biggest potential winning trades and we don't have to hold our trades that long. The shorter you can be in your winning trade, the better, because then you have not the additional risk factors such as news, overnight gaps, or any other risk factor that comes from holding a trade and being exposed to the market risks. And I call them, those common patterns, connectors, because they connect the corrective wave to the impulsive, the corrective wave and the impulsive. And it's really important to learn that. And I made a free video here on YouTube. It's a full pattern trading course. It's a 1-hour course. If you want to learn more about this, it's here on YouTube. So obviously it's 100% free and you can watch that. Check the link in the video description underneath the video if you want to learn more about patterns. And they're really, really important because they help us time the trades. But now back to our example. So let's keep following our chart example, and here's where we left off. You can see here we had the fake out into the weekly pivot, we sold off, had the pullback back into the previous structure. So here is the retest that I've been talking many times about, and you can see we go after the retest back into trend following mode. Then we hit a triple bottom. The trend following seems to be over for now. We wait for a corrective wave, and the corrective waves can shape up in many different ways, as I've just shown you in my example that I've drawn. We can have deep ones, we can reach into the pivot, we cannot maybe even come into the pivot, we can only reach maybe into the last swing low, so here support turns into resistance. We could reach into maybe a different moving average, for example the 50 period SMA works really well for those pullbacks, for deep pullbacks the 100 moving average as well. So there can be different ways of the corrective ways and how they look on your charts and where they reach into. But if you see that a pullback is reaching into a pivot, especially the weekly pivot, then can be a great starting point. So here we want to really follow the price action and we want to see how can we get into the next impulsive wave. How can we find the next leg down? We want to trade those impulsive waves because that's where the market moves the most. We have the largest candles and the biggest moves in a short amount of time. So here you can see we reach into the pivot twice, we retest it, we make lower highs. We have here our level, previous resistance turns into support. Here we have the momentum flush, very important. You always want to see the momentum confirmation. It shows you that you're still in a downtrend, because if you see large candles, that's usually where the trend is going. And you want to see those large candles at a critically important price area. So right after the market seems to have rolled over, this is where you see the tipping point. This is where you go from more buyers to more sellers. And that's where the market accelerates. We move into the triple bottom, eventually stay there. We have the lower bounce, break lower, continue. So the next trending leg unfolded here. Another one, you can see it seems like we are not able to reach into this pivot, and you get a new pivot point, by the way, every week. So here you can see a very flat corrective wave. We have a trend line that we can start with. Seems like we already see some weakness. Here, that's that. We have the push, the momentum is coming back. You see huge momentum flush into the next corrective waves, reach into the moving average. Support turns into resistance. We have the retest, deceleration, move lower. We retest the next structure, support turns into resistance, unfolds, trend line. So that's why it's very important to spend some time studying those different corrective ways, because they can really happen in so many different ways. They can be trend line, they can be sideways, they can be pullbacks into the pivot point. So there are so many variations, and it does take time, obviously, to see many examples. So if you're interested, it's really great trading approach. I would recommend to spend a lot of time. Do as much backtesting as you can. If you want to know how to backtest properly, by the way, let me know in the comments below. I can make a video about that as well. And then just look at as many different examples as you can. And over time, your mind and your eyes will be trained to this pattern recognition. You can see here the trend line where we left off. We sold off, trending leg, very strong move in a short amount of time. We have a major bottom, pull back into the pivot. Why is it still okay? Why is it okay breaking the pivot? Because we never retested as support. As long as we don't have a retest where the market goes from trading below it to then suddenly this becoming support and the market bouncing off the pivot, you are still in a bearish market, and you will see that time and time again. Very strong push, probably a lot of profit taking as well. You can see we had already here a very long downtrend, and the longer the market goes, the more people will have more profits, and at one point they will take profits, especially after a period of weakness that contributes here to the spike. But we fall back below the pivot, and you can see the momentum is coming in very quickly here, and then you can see the push. We have here our lower bounce pattern, breakout, continuation. So you can see impulsive wave, corrective waves. That's how most of the markets, most of the trends unfold. Obviously nothing works 100%, and then this is what I was referring to. Whereas previously we broke above the pivot and we immediately come back, and we don't even care. There's no way that this is holding or even tested as support. Whereas here, we break above it. We have here already a first indication that maybe this is a retest, but here it's clear we break below the pivot and then we above it. So now it seems like we are rejecting the pivot point from above. So that's the market change. That's where you want to be careful. That's where you want to start looking for bullish opportunities. And then they happen just in the same way, just in reverse. Previous resistance turns into support. We have base breakouts. Impulsive waves are now the bullish waves. They're much stronger, and that's how you can start. So this is how the trend unfolded. This is the fake out where we left off. Here are some break and retests. Here's the second pivot retest. Here's the trend line. Here we have those break and retests in the horizontal fashion. Here a deeper one, trend line. Here is where we fake out the pivot point. Here we have the lower bounce breakout, maybe even head and shoulders here. And here is then the trend change. So you can see trends are very complex. There are many different ways how you can go about trend trading. And the good thing about trend trading is that if you catch those trend waves, often you can trade very large reward to risk ratios. And that's the beauty of trend trading, because reward to risk ratio and win rate go hand in hand. And trend traders don't have to be right often, so you don't need to have a very high win rate, as we will see now. Because usually or often what happens is that trend traders have way larger reward to risk ratios. And then you can see if we have a reward to risk ratio of 1:1, which means that your winners are the same size as your losses, that means you have to trade at least 50% to break even. So you need to have a win rate of 50% at least, or you're going to lose money. Whereas a 3:1 reward to risk ratio, so your winners are 3 times the size of your losses, you only need to be right 1 out of every 4 trades and still break even. So if you can then have a 50% win rate and have a 3:1, you are going to make money just based on how the math plays out. But if we go up, you can see, if we go to a 5:1 reward to risk ratio, so the winners are 5 times the size of your losses, you only need 17% win rate to break even. So that's the beauty of trend trading. You don't need to have a high strike rate. You don't need to be right all the time. You don't even need to be right most of the time. You can be wrong most of the time. And if you have trades with a large enough reward to risk ratio, that could take care of your account growth alone already. So that's the beauty of it. And I hope you learned something. Now let's get into the trading view and I'll show you how to set this up properly. So now let's look at how to set this up in your trading view. And it's very simple. We go to indicator, and here all you need to do is just type in pivot, and then it's called pivot point standard. We just click on it once and then we have it on our charts. We need to make some adjustments because that's how it looks by default. So let's get into the settings here. And now let's see what we can do. First of all, we can turn off the labels. They're not super important. Then what I typically do is that I get rid of S1 until S5 and R1 until R5. They are the pivot support and resistance levels, but for what we are doing right now, it's not super important. We just stay with P, which is the central pivot point. I make it a little bit bigger, thicker. Here, increase the width because that's more easy to see for you. And then that's it. What you also can do is, if you want to make sure you only have the weekly pivot, you go to pivot time frame and we go to weekly, and that's it. If you don't want to do back testing, what you can do is just increase this number so you get more historical pivots, which is helpful. So now let's see what we have. Seems like we are in a trending market. So here you can see we seems to be trading below the pivot here. Let me change that for you. So we have been trading here below the pivot. Then here we are suddenly above the pivot. So now you can see we retest the pivot as support. Here we change that and now we retest the pivot from underneath here as well, 2 times basically here. And then again we change. Right click, remove drawing, gives us a clear chart. And now you can see it seems like we have a change again. We use the pivot as resistance here as well. But then we break above the pivot, right? So here we have to break and retest. So it seems like we may be looking at a potential bullish scenario. And if you look, we have a horizontal base breakout. So if you go to a lower time frame, you can see we have here an interesting pattern. We have here the lows that get faked out. We are above the pivot, so we want to look for longs anyway. And then you can see we have this resistance here that gets broken, retested. What is really helpful, sometimes I like to use the 50 MA, SMA simple. It's always on my charts. And it's ideal for pullbacks as well. Sometimes the market doesn't go all the way back to the pivot, and sometimes only the pullback reaches into the 50 SMA. So having that on your chart just helps you find different types of pullbacks. And then you can see, seems like we are here in an uptrend, and you can see the impulsive wave is continued. Now you can see it seems like we are in a corrective wave. The market is pulling back. We have a little bit here of a level, not too much here. The pivot is super far away. We're not testing the moving average. Let's see. Okay, so now it seems a little bit different. We have here this triple top, 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 top. We are also making here, seems like lower high, higher lows. So maybe we have some type of head and shoulder pattern in here, right? We can see that. We're reaching almost the moving average. We have the breakout with momentum. We trade higher. It seems like we're doing the retest. And now you can see we're moving higher. So the pivot has reset as well. And this is what happens if you have the weekly pivot, which you see here weekly. You get a new pivot every week. And that is then how you can make sure that you are still above the pivot if you're in a long market. And that's then how you can use that on your charts. It's a very good tool for trending markets. It works especially well. You can see break and retest into the market after a structure, after hitting the moving average. And then we just ride the trend wave, wait for the next corrective wave. We hit the moving average. Do we have some type of pattern maybe? Maybe we can do something like that. And then you can just keep going and keep trending the market, break and retest. Seems to be very deep now. Are we returning? Still above the pivot, you can see that. So the pivot has reset. We have another trend push, retest, back into this structure it seems like. And that's how you can then just infinitely play it. The replay function in TradingView here at the top, replay, is really great for that. So what you could do is just add the 50 SMA, also add the weekly pivot points, use the replay function, and then just play the trends, see what you can learn. In the beginning, just try to observe the pivot point, how it updates every day, how the relationship from the market is, what are pullbacks doing around the pivots, what happens when the market is changing the pivot structure. So once we go from trading above the pivot to trading below it, or like here, trading below the pivot to trading above it, and then just see how the trends unfold, look for the structures, and you will learn quite a bit about the markets, trending, and a lot of other things. So that is very interesting. We are testing the pivot as support. Are we getting below it now? And that could then start a trend change, or we get here back above the trend line to a continuation. And that is then the game that you can play. What I would recommend, always grab a screenshot. So on the top right, take a snapshot, save chart image, will automatically pull in a screenshot for you. And then you can just sort them out somewhere, store them somewhere in your library, and then come back later. It's really good for your pattern recognition and to train your eye and your mind to see those types of different patterns. So I hope you learned something in the video. If you did, let me know. Now you can see, just let's take a look at this example because it's quite interesting. So here, we are having this inverse head and shoulder that I drew. We have the pivot retest. We have here a low, a triple low, higher lows. So at this point, if we get the breakout, which we're getting, and the retest, we should theoretically see more bullishness to come. And let's see. Let's just forward a little bit. We're trading around the pivot. It is holding. And let's continue. Okay, here we go. We have the base breakout here out of this structure. And then we continue higher. All right, so very interesting example. You can see the pivot works really nice, and I hope you got something out of it. Let me know in the comments, and then you will hear from me next Tuesday with a new video.